Capital and Counties Properties, or Capco, as it's commonly known, is a London property development company with two key assets focused on Earls Court and Covent Garden.
So the key word there was development. So this one isn't one of those sort of retail or real estate sort of things that pays out lots of income. It's looking at assets and trying to make them more valuable over time.
And it's got very valuable assets in those two destinations. Market cap here, 39 billion rand, trades on a historic yield of 0.6%.
Yeah, so this one was quite a significant casualty of Brexit, I think, and it has been a perennial favourite of local fund managers and to some extent hedge fund managers as well. 2015, the share did incredibly well. The rand weakened. It all looked very positive in the UK. Their developments were going well. It was at a high, and subsequent to that has dropped significantly over the last years, down 40%. Part of it obviously pound weakening, but also a significant weakening in the UK property environment, particularly for developers like Capco.
You would think, though, if you go with that old adage, location, 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 you can't go wrong with
Well, that's what I was going to ask,
Garden.
because you know the people still want to buy and own property in London, but is it the developers who've had to kind of pull back their horns in terms of rolling out? So Earls Court's got all these plans to do exhibition centres and things. That's all been sort of slowed down.
Yeah, so they've got an exhibition operation, and that's been less affected. They've been doing a lot of residential development.
Yeah, the Lily Street stuff.
Yes, in the Earls Court area, and in the most recent results, they had to reduce the valuation by 20% of the residential portion of the Earls Court property. And so that shows you the pressure. It was Brexit, and also there's an issue with stamp tax as well on property.
Because one of the uncertainties with Brexit is there are lots of Europeans who work in the UK, and it's not at all clear that their rights are going to be protected. It could actually be that many of them lose the opportunity to stay there and have issues. So that whole buy-to-let property market, where lots of people live in the Greater London area and don't own the properties, it becomes a concern.
You assured me, just as an aside, that my British passport is intact. It's not going to be impacted by Brexit. You did say that to me.
I didn't actually, and I have no idea about British passports whatsoever.
Do you have any visibility on British passports?
Look, I think the British passport will be fine in terms of the exact access you get to the UK and your rights if you want to sort of permanently move there.
You probably can't travel freely through Europe anymore. Anyway, sorry.
Yes,
back
through Europe could be a
Capital
concern.
and Counties.
So look, it's listed here because it's one of the half of the old Liberty International. So it's a long standing. We haven't even looked at the share price
yet.
We've
gotten
that will
carried
show
away.
the 40% slide that Rowan's referring to. So some of the euphoria coming out of it. But really, is this a good time to buy it?
Is the downside overdone?
Look, again, we're talking about protracted uncertainty, and they're quite exposed to it. I think the Covent Garden property is a very strong property, and in that area, retail will remain strong, good demand. But I'm worried about the peripheral assets. So
Not hot.
Yeah, because the original properties, Covent Garden is like a 7th century, things. That's not going anywhere anytime soon. But this one is dependent not for its yield, but for the uplift from the new developments. I'd also pass. Not hot.